Hello and welcome to the stock specific class here for Thursday, July the 27th. Sorry, I was not able to do the class live today, which is why you're getting the recording. But wanted to make sure you had the information this week. To start off with, the markets keeps grinding higher and keeps kind of getting more overbought. But it's in a situation where it could start to pull back here pretty soon. And really with today's reversal, the way it's looking, this could be the start of a correction. Now, what we're looking for here is it just a pullback that creates another buying opportunity, or is it something bigger? With the market being stretched as much as it is, it could end up being something bigger. A lot of times when the magnitude of moves end up creating opposite moves in the same magnitude or close to the same magnitude. So in other words, if you get whenever you see a stock that starts to go parabolic, it's been kind of trending up and then it goes like this. Very often, if you look at the history of these things, a lot of times when that move is done, and sometimes it can stay parabolic for a little while, but usually it comes right back down just as quickly. Not necessarily all the way back down, although you see that a lot where it comes all the way back down. But even half that move coming back down, it comes back down very sharply. So and sometimes the opposite too. You'll get a really big down sell-off, which is kind of that flush out selling, and then you'll get a sharp bounce back up just as quickly off of that. It doesn't always happen. Sometimes you'll get a real strong sell-off, and it'll take a little bit of time to get that bowl-shaped move where it takes a little bit of time to get back going up, and that's one of the patterns you see me look for on when I'm going through these charts. I like that bowl-shaped move. But just keep that in mind that, and a good example of this is everyone's been talking this week about the Dow streak. The Dow is up 13 straight days in a row. And, I finally did a little bit of research on this, because I usually ignore these things because they're really meaningless. Every single day you'll hear some sort of statistic that backs up what people think are going on, and it's part of what creates the illusion of knowing what the market's going to do next. The last time the market did this, it closed positive, or it closed positive every single time when it does this. And what usually ends up happening is that one time, now that you point that out, this is the one time where it doesn't work. The market just doesn't allow you to be able to have absolute confidence in moves or get absolute moves. But I did a little research on this, and everyone's talking about the Dow 13-day winning streak. And by the way, you look at the days, there's a lot of days where it barely closed positive. In fact, let me go right to the Dow chart here so we kind of keep this in front of us here. In fact, on the DIA, which is the ETF that tracks the Dow, we did have a down day right here, but it didn't close lower on the Dow Jones Industrial on the index itself. It actually was just barely positive that day. But I mean, there are not a lot of there's a couple of impressive days in this streak, but there's a few of them that are just really barely. This whole move right here, we're just barely grinding higher. So, but anyway, I went back and looked at the 1987 streak, and I think it happened in January, just right at the beginning of the year in 1987. And then I started to think about what's the first thing I think about when I think of 1987? And any of you that have traded for a long period of time, what's the only thing you think about in 1987? You don't think about a Dow 13-day winning streak. You think about the biggest percentage drop in stock market history that took place that fall in 1987. So that's what I'm trying to say is when things go up very sharply, they can come down very sharply, and it's usually an elevator ride down. It's a stair step up and an elevator ride down. It comes down very quickly a lot of times. So just be careful. And one of the things I was noticing as we got closer to that 13-day streak was, again, my mind thinks in probabilities, and from a probability standpoint, what's the likelihood we're going to go up to 15, 16 days in a row versus the probability of getting a pullback soon. And I think we're seeing that start of that today. In fact, the Dow is about to form a bearish engulfing candle, very strong reversal today in the context of everything. And we'll take a look at that here a little bit more in just a second. Now, as far as direction alerts, not much has changed from Tuesday as far as momentum. The market softened up a little bit, and so we're not in that extreme range on momentum. We are in Brett. Sentiment is extreme. The buy-sell ratios they're not overly extreme right here. They could get wider. And again, the reason for that, and it's worth noting here, is that there's a lot of this has been driven by a smaller amount of stocks. We talked about this, Magnificent Seven stocks. Everyone's mentioned those or talked about those. Now, obviously, over the last several weeks, we've seen more breadth, that more stocks have been participating. And it could be a reason for the market to continue to go higher. Like I said, in the very near term, we're due for a little bit of a pullback from this stretched condition. But there's I look at if you look at the index tab right up here, usually when the market is really due for a big pullback is when you get double-digit ratios on the buy-sell ratios. We're not there yet. We've got some higher ratios, but not double-digit. And then you get all these indicators lining up. Oh, the direction alerts here. You get the momentum. It doesn't have to be at the far right, but it's on the right side of the midpoint of that extreme risk. You get breadth in that same spot, and then sentiment. When all those things kind of line up, and that doesn't happen very often, by the way. It just screams of a major market pullback. And so you usually get the warning signs ahead of time. It's just a matter of whether you heed them. This other sentiment indicator, again, wouldn't take much of a move higher. And I don't know if, these update overnight, so I don't know if the initial open today might have, we opened higher. That have pushed that indicator up closer to that extreme range. If it's a reversal though today, it wouldn't. It would stay down in this area right here. But we do know that we've been up in this upper range. We're we're near an area where the market is overbought, and there's other things you could look at. If you're looking at a traditional charting with traditional charts where you can add in technical indicators and stuff. You can look at RSI. I can show you here on the RSI in just a second, some of these extreme readings that we've been getting recently. So it's now, again, it's one thing to recognize when you're in that overbought condition. The next step then is to are you seeing any sort of reversal? And we talked about this on let's go to our charts here. We talked about this on Tuesday. Where we weren't seeing we recognized that we were in an overbought condition, but we weren't seeing a bearish reversal candle yet. You're waiting for the bearish reversal candle to kind of hopefully see, and you hope you get it. You don't always get it. Sometimes it just gaps down and drops. Here was this had a little bit of a warning, a little bit of a shooting star candle right there, and then it dropped. But this is a very strong reversal. We opened way up here. Anytime you gap up in an overbought condition, this is the first thing I start to look for is does it hold the gap up, or Usually it doesn't. In this case, it's reversed it. And what it's creating is what we call a bearish engulfing candle, where it completely engulfs the day before. Again, you could line up a trend line. You're at the top of a trend line. You're in an overbought state. Probabilities are pretty high that if this holds into the close, and at the time of doing this recording, there's still some time before the market closes, and if it holds into the close, that's a pretty strong, and that's the strongest bearish reversal that we've seen in the last few weeks. We've had a few of them, but that would be the strongest one. And this is a pretty strong one right here, a big thrust up right there, and then a reversal led to, and this might be what we're looking at right here, maybe just a little pullback. But considering that the market is just not expecting anything dramatic and it's not prepared for anything dramatic, that could spiral into something much bigger. The VIX being down this low. By the way, the VIX move was pretty sharp reversal candle today too, as we'll look at that here in a second. So pretty significant today. Now, usually I would expect this is a reversal candle, but it wasn't a major reversal candle. What I call a major reversal candle. The stronger reversal candles, the strongest one is the shooting star candle, my favorite, and that's where you're at a top. Usually you want it context. If you had a topping, a run up, and then you had a gap up, and it ran up and then came all the way back down, and usually I like it to close lower than where it opens. So it has that red body to it. That's the strongest reversal. And I'm sorry, and it doesn't work all the time, but that's as good as it gets as far as probabilities are concerned for a reversal signal. The second was probably the bearish engulfing candle, which is this right here. Third is probably a bearish inside day. See if we have an example of an inside day here. I don't see one that I can show you in this context here, but that's when you'd have this is close to it right here, but if you would have had this big bullish candle and then the next day you open lower and you trade lower, but you're inside of the candle of the day before, that's what we call an inside day. And then you get, this is a pretty moderate reversal right here, where you opened higher, closed lower than where you opened after a big run up. That's a decent reversal candle, and that led to a decent pullback right there. But you get a bearish engulfing. It probably means there's a few days. And keep in mind, tomorrow's Friday, so if we drop tomorrow, markets typically don't bottom on a Friday. Again, not 100%, not absolute, but usually that would follow through on Monday. And just eyeballing it, I would assume that back out a little bit to a 1-year chart. I would assume that you're looking at I might have to go to a 2-year chart here. I would probably assume that you're looking at a pullback to here if it's a bigger one. And again, that's not a real, actually, that would be just a normal one. For the run we've had right here, you'd only be retracing about a third of that, maybe getting close to 50%, but that would make sense that it could pull back into that area right there. You also have a little bit of resistance right here. So if it's just a real brief one, that's probably where it would pull back to. This would be a little bit bigger. And then if it's even bigger, if it breaks below here, you've got a lot of other things that could be going on, especially if it did it within a few days. You could be in the midst of a much bigger correction at that point. But I don't see that right now. I wouldn't expect that just yet. All right, so let's look at some of the other candles as well. The Dow, again, the big winning streak will probably end today, and unless if there's a major, if this comes way off the lows and all the way back up, then maybe we do have a few more days where it keeps going, because that would tell you there's still buyers, and the buyers are still closing it strong. But if that holds, and especially if it drops down a little bit further and creates that engulfing candle, that'd be pretty bearish. Qs, on Tuesday, we're already expecting another move. We were looking at this as being the start of a move. This is acting like kind of a wave B. So it could be A, B, C, and I'd probably be looking at, down around this area in here for it to pull back to. If it's just a regular pullback, if it's bigger than that, we'd have to go back and look at other areas there. But it also, keep in mind, could be, if it is a start of a bigger correction, this could be just wave 1, wave 2, and you get 3, 4, 5, or something like that. But the bottom line is this behavior right here, the way all that is formed, you got impulsive up and then impulsive down, and then you're getting corrective. That is very often how things reverse. When you're reversing, again, this goes back to basic chart or trend behavior, and it's not absolute. It's not how every stock works perfectly. But it's general. It's the general flow of how these stocks tend to move. They tend to alternate between impulsive and corrective moves. When you're in a downtrend, you have a downward impulsive move, then corrective, downward, corrective. When you reverse trend, very often, not always, but very often, you'll get back-to-back impulsive moves in the opposite direction. So you go impulsive down, followed by impulsive up. And then you see what the next move is to tell you if it's confirming that trend reversal. If you see a corrective move right here, then that means that the next move is probably going to be another impulsive move up, and then corrective and impulsive, and then when you're in a top, very often you'll get impulsive up, impulsive down, and then you want to see how that next move looks. If it looks corrective, it's probably got another move down, and that's kind of what I'm seeing right here: impulsive up, impulsive down, corrective. Could be forming a strong bearish candle right there for maybe leading to another move. Should lead to another move down. Russell 2000. Same thing. So we got every index forming bearish engulfing candles, and we saw that we're at a key resistance area. I mean, going back to the SPY, one thing I talked about on Tuesday was the next resistance area, key resistance area is right here. And we're just below it, but we're close enough to it to where it would make sense if it's reversing today, because everyone's been watching that. Everyone's been talking about that as the next resistance area for the market. Next area to watch to see if we break through that. And so sometimes when what the market will do is it'll reverse a little bit before it because everyone's expecting it to be right here. So if we zoom in a little bit, well, actually, I'll show you on another chart if we go over here. So if we go here on the SPY, you've got see, this is where that line is. It's right here. So everyone's expecting it to come up to here, but here we're getting the bearish reversal candle today, the strong one. Now on RSI, anything above 70 is considered overbought. So we got overbought right here, and it could go a little bit above 70. So you're not looking for exactness here, but again, when you get into that overbought condition, you start to look for a bearish reversal candle or something to indicate it's starting. Hopefully you get it. You don't always get it, but most of the time you do. That's where that was overbought. We got that bearish candle here, got this little pullback. Here's what we're dealing with recently. We were near overbought, and you got a little bit of a pullback here, but that was shallow. You've had a few of these little bearish candles in that overbought condition that didn't work. Now, these weren't the strongest ones. Here I thought was significant because you had an indecision candle, and then it closed below it here with a down day. I thought that was the pullback. You were overbought there. And these were all, they're most of the time those are going to work, but the market's been shaking all those off. Today, though, it's really, really distinct. something, it's got a feel of something's going on. And again, in the context of when it's happening right at a resistance area that everyone can see. You've got a diverging RSI where you've got a lower high. You're both of these are extreme, but you got a lower high here. So it's already, the relative strength is already rolling over, even though the stock itself or the market itself went higher. This is if you're in trading and you want 1 + 1 always equals 2, 2 + 2 always equals 4. That's your mindset, and that's how you expect things to be. Trading is not for you. You don't have absolute. It's kind of like if you saw Oppenheimer, the big line in there is there's a very small probability that if we ignite this bomb, it's gonna explode the whole planet. It's gonna ignite the whole planet. And the general was like, he's like, well, how big's the probability? So he's like, it's very small, very small. And he's like, well, what would you like? And he's like, I'd like no chance. I'd like no probability of igniting, blowing up the entire planet. But that's, there just isn't that in trading. But this is as close as it comes to absolute. I mean, this is a stronger reversal in the context of what we're looking at here. This is about as strong as it gets. Now, again, all it might signal is just a little pullback. I'm not saying this is the start of a massive drop, but this is signaling that there's a good chance over the next couple of days it pulls back. Which is why, although this is the stock-specific class, I'm not going to recommend any charts today, any patterns today, except for what we will do is we'll look at some inverse ETFs. So there will be something you could trade, but that's what I would be looking to trade right now, is something that will go up if the market goes down in this situation, because there's a very strong probability over the next few days that it pulls back a little bit. All right, so while we're here, let's take a look at the VIX. I mentioned the VIX reversal. Look at that. So it opened lower. It was trading all the way down here, and then reversed back up. We're at the highs of the day. We got about 45 minutes before the market closes. We'll see if that holds that or goes higher into that. That's the biggest move in the VIX that we've seen in a while, since back in here. And again, that led to a little pullback. This was the regional bank crisis right here. And again, that didn't last very long. But if you look at the context of on the chart here with the SPY, this was back. Let me see where that was. That was back in March. So yeah, right in here, we had that pullback there. Okay, and again, that was kind of an ABC right there. That's kind of what we're thinking could happen here. But this is the type of correction we might be setting up for. And that'd be good, because it would give a new it would give a good entry point for getting into the bull market, if the bull market continues to give you a new entry point into it. Okay, all right. So the VIX, and now I've seen the VIX looking strong, and then it fades quite a bit into the close, kind of like what it did right here. But I think the key here is there weren't any gaps in the move. A lot of times the VIX gaps get filled. So if you look back here, here was a gap up right here. It filled it immediately. They tend to get filled pretty quickly. And so what you like to see is you like to see this, where you didn't get a gap up in the VIX. It actually did the opposite, where it's moving lower and then it's moving up. That's what I'm saying. Things are lining up here, to where it could it could end up being a decent drop right here. All right, so going back to our charts here, I don't want to spend a lot of time. I don't have a lot of time for the update today, so I will take a look at gold right here. Gold might just be in a wave C, an ABC. Right? Oh, I do want to point out the TLT. Bonds had a big dive down. This is part of the market sell-off right here, reversal. Because this all happened, this drop happened when when it happened, the market really started to slide at that point. And this is, again, when we've been talking about the TLT, we've kind of referenced the 10-year, because the market was watching this a couple weeks ago. I was just at the point where I wasn't going to be bringing this back in again, but it's worth noting because we're pushing towards that. Oh, there we are. We're at 4% again. That 4% is a key level. If we close above 4%, that's going to be, the market's going to freak out about that. If it's 3.999, the market might not freak out, but there's something about that 4. It's a mental thing. I've talked about this a number of times. You price something at $1.99 and it's cheap. You price it at $2, it's expensive, and there's only a penny difference, right? That's kind of what's going on here. But we watch that at the close, because if it closes above there, and it's worth noting too. Let me go back to our TLT chart that we've been watching this support area down here, and we haven't broken it yet. We came very close to breaking it right here, but look at that drop right here. This is where I think it's going to break it. It's going to drop, and I think this move is going to go even higher. I think the 10-year is going to go even higher off of this, and I think the market's going to that'll be the reason why. The selling. That'll be the reason for the selling. That's another thing I've been waiting for, is the market's in this overbought condition. There needs to be a reason to sell, and I think this is going to be the reason everyone's pointing to, is the bond yields shooting up like this. They don't make big moves, and typically, and we've been seeing a lot of wild moves in rates. But this is one of the biggest ones we've seen. I mean, this one's pretty big right here, and the market freaked out a little bit off of that. But this is really big. We'll see how that looks going into the close. Yeah, that's pretty massive move there. All right, so what do you do? Again, I'm not going to recommend entering into any chart patterns right here, because I think if the market all starts selling off pretty sharply, you get where like 90% of the stocks are going to be down. So you'd likely get a better entry point anyway if you wait till next week, wait till Tuesday or something. And I'll try to have a few if it looks like it's just a normal pullback by then, and there's opportunities. We'll probably have we'll have some stocks we'll go over. But what I would do is I'll immediately go into my inverse ETF watch list here. And these are some that you can consider, although not all of them are very good. A lot of the, for instance, short the S&P 500 is the SH. You'll make money if it goes up. If the market drops and it goes up, but how much are you looking to make? Because you get a big if we get a big correction, a decent correction, the market kind of goes up into here. Well, you just made $1 move, right? That's not gonna pay you well enough, all right? And they're designed to do that. They're designed to allow you to make money if the market goes down. These will go up, and you're getting a bullish engulfing candle right here, down here at the bottom. So it is signaling it should go up for a little bit, at least in the next day or two. But are you getting paid for it? So, I've kind of found my favorites. One of my favorites that I like to use is the SARK. This is short the ARK Innovation Fund, Kathy Wood's fund. And, so if we got a decent and a lot of these are little small cap stocks or tech companies. There's a lot of that in there. So, if tech could sell off, which I do, if the market sells off, it should go up in value because her fund will go down in value. If you ever want to trade inversely to Tesla is the biggest holding in this. And so sometimes if I want to trade Tesla indirectly, I'll use either the ARKK or the SARK. But if the market makes a decent correction, it gets up into here. Well, now you got a $4 move there or something like that. You're getting paid for that drop, right? So I like the SARK. I like trading the inverse to the chip stocks, which is the SOXS. So if you think chip stocks could pull back with the market, which I do, if the market pulls back, you're getting a bullish hammer candle today. This one actually traded a little bit better. Now it's down here in the single digits, but even then, you get a decent move up. You got a $3 move there if it just had a decent correction. The chip stocks had a decent correction, but some of these you're going to get paid a little bit better if you get the move. So I'm going to add a few of these. I do already have the SARK. And I've gotten out of everything else except for Bitcoin, the Bitcoin trade, and that one's actually pretty close to being stopped out. But I'm willing to wait on that one to see if I get stopped out. I still like that pattern. It's still kind of a bullish pattern. But let me add in the SOXS. Let's add to our portfolio. Well, let's first of all look at it so we can see where a stop will be. We'll put a stop down here at today's low. Because again, if it goes above today's high, then we're wrong. But today's low is at $8.32. I'll just put $8.30 in. $8.30 and 1,000 shares. Right at 9,000, that'll be fine. Let's go ahead and purchase that. And then I already have the SARK. You could also do this is kind of be a little bit repetitive here, but the SQQQ is the short the Qs. Again, this one, if we got a decent pullback, it's a couple dollars we're making. It's not as good. I'm not going to add anything else. I think I'm fine with that. I may add tomorrow if it continues to go, if it confirms it tomorrow. But I'll leave it at that for now. All right, so I think that does it. So have a great weekend, and we'll see you on Tuesday for the next market update class. Thanks, everyone. Bye now.